This is the headquarters of the IMF and the World Bank in Washington, D.C. They put their mission statement proudly up on their walls to end poverty. They claim to be the lender of last resort for the world economy and the development bank that helps poor countries where private capital has no appetite to invest. But in reality, they are, there's more than meets the eye here. As any alien, kind of adventurer would start to realize, there's a different dynamic going on underneath. And it relates to the fact that these are not charitable institutions. The IMF and World Bank are creditors. They give out loans. Just like when you borrow a mortgage, you end up paying the yellow line, not the blue line. You end up paying principal plus interest. These are not charities. This is so important to remember. So you have all these poor countries around the world that for decades have been receiving loans from the IMF and the World Bank. And yes, of course, for the first 2 years, the dictators in charge get a little bit of infusion of cash, that black line. But then it starts to go so deeply negative. And this is the exponential curve of external debt for what were known as third world, or today global south countries. You may have had a country that had $100 million in debt in the 1970s. Today it has $100 billion. So this is like a Ponzi scheme. It's never meant to be repaid. This is not escapable. And you have a country like Ghana that might have had 17 different loans from the IMF over time. And the thing is, this isn't just predatory lending. There's also something called structural adjustments. So when these countries borrow from the bank or the fund, they have to agree to a laundry list of austerity measures, increased taxes, higher interest rates, an end to subsidies on food and energy, currency devaluation, basically maximizing profit at the expense, living standards for people in poor countries. This is an example in the 90s of when the IMF and the French government cut in half the value of the currency that people in 15 different African countries used. So their price inflation went way up, but their exports got cheaper, and that's what it's really all about for these lenders, is exports. This is in Bangladesh. They do shrimp farming, so whether it's palm oil or rubber or cotton, it's always like exports, agricultural exports that aren't meant to be eaten locally, that are meant to feed us, actually, right? And when it's not agriculture, when it's not changing the agriculture of these countries to make them less sovereign and more dependent, it's resource extraction. So it might be a loan to fund a hydroelectric project to dig ore out of a mountain and send it off to international markets without benefiting the country. This is all accomplished through something called a double loan. So you have France giving 100 million euros to the Ivory Coast, but they get paid right back because the country hires French companies to do the work. And then the country, the taxpayers, are left on the hook for another 150 million euros. So this is exploitation sold as development. And this is the map of net resource transfers. So since 1982, the South has subsidized our way of life in the North to the tune of today now trillions of dollars a year. This is another way of looking at it. This is the amount of resources flowing from the South to the North. And in some ways, it really is just a recast of imperialism. I mean, basically what the bank and the fund did was replace the weapon of the sword or the gun with debt. And the way that they would do this over time is by working with dictators. And as a human rights activist, that's what really got me interested in this entire project, was thinking about how they didn't like to work with democracies, basically. They liked to work with rulers that would guarantee they didn't have any messy street protests. Some rulers would stand up and say, no, we're not going to pay back your debt. This is Sankara in Burkina Faso. Well, guess what? He was assassinated, and he was replaced by a guy named Blaise Compaoré from Burkina Faso. And in the same country, that guy ended up borrowing heavily from the IMF and being very happy as a client. And you had so many of these situations where democratic movements were crushed by relationships with the IMF and World Bank. For example, this is just the zoom out. This is from the 70s to today, the debt percentage of GDP for developing economies. And it's inescapable. And guess what? Structural adjustment killed millions of people, and no one's ever going to have any justice. That's the sad part of this talk, is there won't be any justice because the voting rights at the IMF are not done by population on the left. They're done by World War II power structure on the right. So there is no escape. That's the sad part. But what we are noticing, what's really interesting, is that there is a little bit of an escape. So if you look at the left side of this chart, the countries, Thailand, Nigeria, Philippines, South Africa, Turkey, that have basically been screwed over the worst by the IMF through decades and decades, have the highest rate of Bitcoin and cryptocurrency adoption. So while there will never be any justice, these people will never go to prison. And in the 80s and 90s and 2000s, there wasn't any escape for people from structural adjustment. Today there is, and I think it's one of the ironies of the digital age that basically open source code is a way out of what was previously thought to be inescapable debt. Thank you very much.